that, now let's come to the exception reporting. Forget about the exception reporting so far. These are the same variances that we have calculated. First of all, sales variance. In sales variance, activity was favorable. We sold more units than budgeted. And at the same time, efficiency or price variance was 495 adverse. So in price, we were having, instead of writing efficiency, let's write price here. For labor, it can be efficiency. So to support or to sell more units, we start charging less prices, and that lead to overall favorable variance. But a very small one, only 660 favorable. Okay, good enough. After that, direct material. So to support extra sales, we need to buy more raw material. We use more raw material. Adverse in raw material activity or raw material usage. And same for the price, also adverse. And overall, the total adverse was 1600. So what is the meaning here? To get a favorable of 660, we had an adverse variance of 1600 in direct material. It's bad. And then if we further go to the labor variance, activity, there's an adverse variance of 20,400 in activity. Labor works so much more as compared to the budgeted. And at the same time, the efficiency or the price or the cost that we need to pay to the labor is also 6,600 adverse. And see, for direct labor variance, the situation even get worse with 27,000 adverse, very big. So if I only see the sales variance, okay, performance is good, 660 favorable, it's impressive. But if I see the whole picture here, because to get 660 favorable, direct material got adverse, direct labor got adverse, and direct labor got even with more worse condition. Why? So what's the reason? So if organization is getting one favorable, it doesn't mean that all the other variances are favorable. So managers, when they need to do comparisons or when they need to do controlling, so they will not only look for favorable, but they always need to see that how this one favorable will going to have effect on the other variances like material, labor, overheads, and so on. Now, just to increase the sale, we need to increase the production. Direct material is sustainable, not big adverse effect, but labor was crucial. Why? Because maybe we were unable to find labor to support our higher productions. Labor was not available in the market. So we maybe bring labor from the other cities. We need to pay for their traveling expenses, hotel expenses. So because of that, just to sustain a little bit higher production, we incurred so much higher cost for the labor. So what do you think? This 660 favorable variance in a sales revenue for this organization, is it acceptable or not?
No, sir, because
this favorable variance is the worst thing that happened to the organization. To get one favorable, we got two adverse and much bigger adverse variances. But at the same time, if the situation is little different, sales variance is, I'm giving you extreme example, is 1 million favorable. Direct material is 3,000 adverse, the total variance, and direct labor is same, 27,000. Now this thing is somehow adjustable. Why? To get 1 million favorable variance in the sale revenue, the adverse variance we face 3,000 in direct material, 27,000 direct labor, total 30,000 adverse. So if 30,000 adverse occur and we got the favorable variance of $1 million, yes, it's justifiable. It's a must-do thing. But only for 660 favorable variance, we got 27,000 and 1,600, almost $30,000 of adverse variance. This is unacceptable. This favorable, like as you said before, that this favorable sales variance, truly it's not a favorable variance. It's the worst thing that can happen to the organization. Clear with this thing?
Yes, sir.
So with this example, we learn one thing, that variances are not only controllable and non-controllable, but much more serious thing and much more important thing, they are interdependent upon each other. One favorable can trigger other adverse variances. One adverse can trigger other favorable variances, and so on. So variances can be controllable, non-controllable, and most important, interdependent. Clear with this thing?
Yes, sir.
Now manager got all this information. What next he has to do? The next job is we calculated the variances, we got the interpretations, we know what goes wrong. Now with this organization, what manager can do? What do you think? What should be the corrective action for a manager?
To increase the sale price first, because it all started off from there.
Very good. First of all, tell the sales staff, no need to sell at a lower prices, sell at normal prices. Or why? What's the reason for normal prices? So we get in price, we will get the favorable variance. And second, because of that, our demand will be normal. This will not be an artificial created demand. And because of that, our production will remain at normal. And when production will remain at normal, we do not need to buy suddenly or excessive raw materials. We do not need to get more labor. So that will go back to the normal level. But if we want to further grow or expand our organization, so first we need to solve the material problem, labor problem. After that only we can decrease the selling prices. So now when manager take a corrective action, there are two types of control systems manager usually use. One is called feedback control. Second is called feed forward control. Now see, everything has happened in this organization. We calculated the variances. We find out the variances. When we take a corrective actions after the actual activity or after happening of the actual activity, this is what we call feedback control. Everything has happened. Actual activity is done, loss is being done, but now we want to protect ourselves that this loss should not going to repeat in the future. This is what we call feedback control. Feed forward control, that managers need to foresee the future. They need to think, if I decrease the selling price, sales demand will increase, production will increase, from where I will get the raw material, from where I will get the labor if I need more labor. If he is doing all this planning beforehand, if he is doing all this planning before the actual activity, this is what we call feed forward control. So both are okay, feedback control and feed forward control, but which one is desirable? What do you think? Which control are better? Which feedback or feed forward?
Feed forward should be better.
Because feed forward control will always be better. Feedback control is also necessary, but in feedback control, loss is already occurred and we do not want to face this loss again, so we are protecting ourselves. But feed forward control is better because at the first spot we will identify our weaknesses and then we will going to control that. Clear with this thing?
Yes, sir.
Okay. What is exception reporting here? As we already see that for variances, we can calculate percentage, variance as a percentage. So first of all, we calculate our variances as a percentage. Now we can have lots of different variances in our budget. Like remember income statement item. For all the items of income statement, we can produce the budget and then we can compare with the actual performance and then we can calculate variances in amounts as well as in percentage. Now the thing is, which variances we should report? If I'm a cost accountant and if we are having lots of different type of expenses and sales revenue and everything, so maybe I'm calculating 50-60 variance for an organization. So should I need to report all the variances to the manager? That will be pretty much time wasting for the manager if I'm going to report all the variances. What is the best thing to do? Under exception reporting, it suggests that managers should set up a target or a threshold that any variance that is more than 10%, you only need to report those to me. And rest of that, you also need to calculate, but you will directly not going to report until and unless manager will going to ask for. So what we do basically, manager will set a threshold that, okay, only report me those variances that the variance as percentage is more than 10%. Less than 10%, 1%, 2%, that might not going to be meaningful because the intensity is not there. It's not worth to look into that or to investigate the reasons for that. So managers, what they do, they will set a threshold and they only going to ask for the report that there are 60 variances. Tell me which variances are more than 10%. And then manager will further going to take a feedback control or feed forward control for those variances. This is what we call exception reporting. Do not report everything to the manager. Only report big events to the manager. So manager can take a corrective actions. It will going to save managers time and it will help the managers to focus on the key events instead of wasting his time for reading a reports of 10 pages. That will never going to be helpful for the manager. Clear with this thing?
Yes, sir.
Okay, so this is all about the exception reporting. There is one question, it's a very important question of exception reporting. Requirement is which variance should be investigated. Read the question and tell me which one should be investigated. Give it a try.
Variance divided by the budgeted, right?
Variance
That
divided
was
by
the formula,
budgeted.
right, sir?
Yes. To calculate the percentage,
589.
but first you
Yes,
need to get the variance. So budgeted minus actual, this will give you the variance.
by the
Then
budget.
we need to compare it always with the budgeted. That is our target. Multiply 100.
Yes.
So variance as percentage. This is the same percentage formula.
Yes, sir. Okay, sir. The first two, direct material and direct labor.
Yes, this is what we call exception reporting. It only reports material or significant information to the managers. Clear with this thing?
Yes, sir.
Okay. One more question. The following variances are, this is now about the interpretation, about the investigation phase of variance analysis. So read out the question and tell me which option is correct. Two reasons are given for these two variances. So think which one goes with the variances.
Okay. A, one only, sir?
One only. Okay, let's look into that. First of all, direct material total variance is adverse and direct material usage variance is favorable. So what does it mean? Usage variance mean the activity variance or the usage. So it clearly means that whatever kilograms we were supposed to use, we actually use less material, right? But still it leads to overall total variance to an adverse one. So potentially what's the reason for that? Total variance is 800 adverse. Direct material usage variance is 1200 or activity variance is 1200 favorable. This is 1200 favorable. How about this? This is activity and second is cost. How much will be the cost variance?
The cost variance will have to be 1200 plus 800, so 2000 adverse.
1000 adverse. Now, what is the explanation of this? This information is not given in the question. This we find out. So mean we are buying excessively expensive material and it leads to less usage of raw material. This is a very practical thing to consider. It's a very practical variance. Why? When you are going to buy, and why we are paying excessively for buying the raw material? Because we are buying the best quality of raw material. When you want to buy best quality of raw material, so definitely in production process, there will be less wastage, there will be less misuse of raw material, there will be less losses, so usage will be less. So cost variance is adverse and usage variance is favorable. Now rethink about these both and tell me which one is correct. I gave you some extra information for cost variance.
Yes, then the second one is also correct.
Yes. Why? First of all, number one, high quality material was purchased, which led to a lower level of quality control rejects of completed output. That's true. If you're paying extra and you're buying the best quality of raw material, so there will be less quality control rejections, there will be less fault in our completed products, there will be less wastage. All will be the benefit of this. One is true. Second, Rapid inflation affected the price of companies' raw materials, so efforts were made to reduce the quantity of material used per unit of output. We are buying the same quality of raw material, but the problem is the prices in the market have increased due to inflation. And now we give strict instructions to our managers to use as much less raw material as you can. So we are not buying better quality of raw material, same quality at an expensive price, and then we try to use as much less as we can. This is also practical justification for this. So option C is the correct one. Clear with this?
Actually, the second part of the second was that I couldn't really.
Why you didn't think? Because you consider the total one and you consider usage one at first.
No, because I didn't think, because if you need to make something, you need an X amount of material. I didn't think that you'd be reducing the quantity used.
Now, see, this is for exam perspective. For exam perspective, they will give you questions like this, and you need to think. Now, both can be the possible justifications. But if I'm going to categorize it, one truly is much more better justification than two. But it doesn't mean true is false. True is less better than one, but still it's true. So in exam questions, you should be aware of that. Clear with this thing?
Yes. Yes.
Okay.